This was the financial statements of a sole proprietor.
Yeah, we need to go to 32.
We went through this. We looked at the disclosure. And that's exercise 2.1.
Yeah, you asked me just to state what they were.
So let's check how you did. You had to identify those things. Why do we have to identify those things?
So you know which element it is and where it increases and where it decreases.
Besides that, that's application in terms of interpretation. Why else do we need to know what things are?
So we know which statement they go on.
Okay, that's actually more important.
Yeah.
Especially from an exam point of view.
Yeah.
Right, so I'm going to be doing one or two of these with you just to show you what the approach is. Sole proprietor, you shouldn't have struggled with that.
No.
It's the adjustments that you might have struggled with. Right, so how do we approach a question like this? Well, let's open up a page. Okay, so you're going to have to create the statements looking at the approach. So FAC 1602. Okay, we're looking at financial statements, looking at disclosure. That's the focus. Right, so what do they want you to show here?
Well, you just told me I must just state what they asked.
Yes,
so...
we're going to look at that, but when we check it, we're going to do the disclosure. So this is what you would do in the exam when approaching a question like this.
Yeah.
So what does disclosure mean? Draw up statements.
Yeah.
So you need to know what the 4 statements look like so that you can create an answer that's going to get you the maximum possible marks.
Yeah.
So what do they want here? All the statements, do you agree? Are you going to ask for all the statements in the exam?
No.
No. So let's test your knowledge around that. So if I want to create the statement of comprehensive income,
that's income and expenses.
Good. If I want to create
financial position.
Yes.
Assets and liabilities.
Good. And do you also disclose equity in a statement of financial position?
Yes, you do. On
but
liabilities.
It's a small little section.
Yeah, it's by liabilities, just before liabilities.
100%. And where do you see the detail for the owners then? Owner's equity, detail is?
Changes in owner's equity.
Exactly, good. So coming from a 1502 to a 1601 point of view, obviously this module 1602 is looking at both. This particular section, in terms of sole proprietors, you would have covered in 1502.
Yeah.
So basic disclosure, looking at layout and format of the actual company. So here we've got 4 adjustments, and then we've got all of the accounts. Yeah. So now I'm going to have to go down one by one and identify what this is before doing the disclosure. Yeah. So the first step was looking at, well, what was I asked for? They want all the statements. So that's going to require you to draw up everything. What is this first account?
Capital is a liability.
No, it's not. Capital.
Capital's capital.
Yes.
Sorry.
Where do you put capital?
Statement of changes in equity.
Okay, good. So now to get a mark, you would go to the statement of changes in equity. Okay. So in the statement of changes in equity, what does the template show?
Balance at the start, balance at the beginning, balance at the end, and whatever goes under it.
Yes. Okay, so that's revision. Okay, so you're right. By starting with a balance at the beginning of the year, whatever the date is, you'd insert that, and then you'd have some line items in terms of movements, and then balance at the end of the year. And for a sole proprietor, how many columns are you going to have?
1.
Correct. So I'm only going to have 1 column here, and that column the column name is called?
The owner, whatever.
What's the right description for it?
Sole proprietor.
What is owner's equity for a sole proprietor?
Owner, sole proprietor.
Capital.
Oh, okay.
Okay, remember capital is capital, because you haven't learnt of any other capital accounts for a sole proprietorship. The only time where you have different accounts for capital is when you have other forms of ownership.
Yeah.
So if I talk about members' contribution, is that capital?
That's for a CC though.
Correct, but is it capital? It is capital, so that's important. So this is 1502 revision that you would have covered there, that they require you to do in 1602, and that's the template that I'm going to draw up for the statement of changes in equity. I just read a balance. Opening or closing?
It will be opening.
Correct. Because if you look at the question, they didn't actually state the date in the question. They just said, please note. If we look at this then, we can see the year end is 30th December. So obviously 1st Jan would be
the
opening, exactly. And this is a sole proprietor, so 800 is going to go
there, yeah.
Balance. And that'll be for start of the year.
Yeah, opening balance.
What happens to this?
Vehicle is asset, statement of financial position.
Is that what you identified it as?
Asset, yeah, I know it's a financial position.
What type of asset though?
A non-current asset.
Yes, good. So let's just label this SOCIE, and then let's create another sheet, SOFP. Okay, so what does this statement look like? Give me the template for the statements.
So it's statement of financial position, assets.
Good, so you're starting with that. What else?
Then it's non-current assets.
Correct.
Current assets.
Yeah, we can skip a few lines just in case we need more space, but that's fine.
And that's total assets.
Good. Right, and this is obviously studying.
Yeah.
That you need to know going into the exam, because you're going to have to structure and create this particular statement. I like to use 2 columns. You can use 1 if you want to. Totally up to you. I'm going to use 2.
Okay, and then there's equity.
Good. So below this, we can put that here. Equity, is that it?
Then you put liability.
Okay, yeah, equity and
liabilities.
Right, so we need to have a heading for both.
Yes, and then just equity.
You show that.
And then you go down, it's liabilities, non-current, then current.
Okay.
Then it is total equity and liabilities.
Good. You got everything. So now you're ready to draw that up. So that's what I would do in the exam. Exactly what we're discussing now. Total equity and liabilities. Right. Now I've just read one, vehicles. Where am I going to put that?
Non-current asset.
Do you agree vehicles could also go somewhere else? Where?
Cash flow.
PPE notes.
Oh, okay. Property, plant and equipment. Okay, yeah.
Possible if asked for. Okay, so just be careful with that. Sometimes they ask you for the note, sometimes they don't.
Yeah.
If they ask you for the note, make sure you remember what the note looks like from 1502.
Yeah.
Okay, so when I send you the pack, I'll make sure I do it today, so at least then you've got it. So you have something that you can reference when doing the rest of the assignment for next week.
Yeah.
Okay, so PPE is what?
Property, plant and equipment.
Correct. So vehicles is just one of those assets that are going to be shown in the actual note. The note just keeps things simpler in terms of not having to write down every single item here under the non-current assets.
Yeah.
We can just write down one, PPE, and then we can refer to the note, which has all the detail.
Yeah.
How much was the vehicle in terms of balance?
68.
And that's opening. So that will be part of the working. Okay, and that's what we do.
Yeah.
Next, equipment. What is it?
Equipment is a non-current asset.
Good.
It's opening balance of 52,000.
Nice. There you go. More marks. See, this carries marks. So you're not wasting time in the exam by doing this
because will give you a mark.
Yeah, this should be considered a working, so you won't get a full mark for it, but it'll probably carry maybe a half,
but you'll still
which
get
is
something,
still something because you're creating the actual disclosure.
That's a negative asset.
So what do we do with it?
It has to be decreased from the asset itself. It's
Good.
Depreciation.
It's different from depreciation because it's accumulated.
Yeah, it's accumulated, so it's going to be 68,000 minus 27,200.
Good. Okay, next.
Equipment will be the same, so it will be 10,400.
Good.
Fixed deposit is income?
No.
Okay, that's the one that Well, a fixed deposit.
Just tell me what is a fixed deposit before you even tell me what it is.
A fixed deposit is an account.
Okay, so how does the account work? Tell me more about the account.
Don't you have to transfer money into it? It's like a form of savings.
There you go. So now you understand what it is.
So now, it would be an obligation to pay.
It wouldn't be an obligation to pay. You just said it's like savings. So how is savings an obligation to pay?
Okay, then it's an asset.
Yes, because who's saving?
Yourself.
Yes, the business.
Yeah.
So does the business have a fixed deposit?
Yes.
Yes. So does the business own the money in the fixed deposit?
Because it's their own money that they put in.
A resource. The bank would view it as a liability.
Okay.
But that's their view, not your view.
Okay.
We're not doing a bank recon in this module.
Yeah.
That was covered in 1502. It's not in this one, so you don't have to worry about that. Okay, so fixed deposit will go where?
Fixed, it's an asset.
So what did you say it was initially?
I left it out.
Okay, so now we know what it is.
Yes. So it will be a non-current. Oh, yeah, non-current.
Yeah, it's fixed. It's generally going to be longer than 12 months. How much? 50,000. Well, and that's what we do.
Yeah.
Okay, we write it down. We get a mark. We show it. At least that helps build a solution. Inventory. What is it?
Inventory is an asset.
Good.
It's a current asset.
Good. 2560. Forgot to put a brackets. Okay, next.
Trade receivables. It's an asset.
Which one?
It's a current.
Good. Another word for trade receivables?
Inventory.
No. Trade receivables. Another word for trade receivables.
Debtors.
That's better. Okay. How much? Let's get the figure. 22,060. 22,060. Happy with that?
Yes.
Good.
Then bank is also asset.
Good.
It's current.
Yes.
So it's 2320.
2320. 2320.
Then trade payables is a liability and it's a current liability.
Good. 660. That was trade payables. 660. This one?
Service fees earned, it's income.
Good. Where does it go?
Statement of comprehensive income. So
good. Okay, so now we need to open up a separate page and we need to label that SOCI. And then we need to show the.
So it's sales, cost of sales, gross profit, income and expenses.
Good. Okay, so you're right by starting with sales, or they call this revenue depending on your vocabulary. What did we just read? Services rendered. Is that sales?
It's income.
It's a form of income, but what type of business is this?
Sole proprietor.
Yes, but are they selling a product or offering a service?
Service.
Exactly. So we don't have sales here, so there wouldn't be sales and.
So it's not a periodic system.
Yeah, you wouldn't
perpetual.
Have. You wouldn't have any. You wouldn't have any inventory that you're going to be selling.
Okay.
In terms of like buying stock to sell.
Yeah.
Because we just read in the question that they are a service entity. So 313,580. So now we change that word to services rendered. Okay, did you identify that correctly?
Which was
income. Good. Yeah. Brackets. What is it? 313,580. Happy.
Yes.
Okay, then what? You can put a heading, other income.
Because this one doesn't need cost of sales, gross profit, whatever. Because there's no formula. There's no. There's no.
It's a service entity.
Yeah. And then it's other income, other expenses.
Yes. Okay, so now let's see what else we've got here. What
Insurance
is this?
is expense.
This?
Wages expense, admin expense, advertising expense, fuel expense.
These ones?
Depreciation is a negative asset. Negative. I put it as expense.
Yeah, that's right.
Okay.
What is the negative asset? That's the negative asset.
Okay, accumulator. But I did put depreciation, that's expense.
That's negative.
And that's just
in terms of being an asset, this is just a normal expense for different things.
Rental, it's expense, and drawings is drawings.
Okay, yeah. So let's put all of these in correctly. So we've got those figures. Right, so the first one is
insurance.
Yes.
No, service fees earned.
Service fee we looked at, so now insurance.
Sorry,
so insurance. Okay, just read them out. Wages, then.
Wages, admin expenses.
Next.
Advertising, fuel, depreciation on equipment, depreciation on vehicles.
Okay.
And then rental expense.
What else? That it?
That's it.
Okay,
and
great. So now, yeah, and then we just need to put the amounts in as is, which could change depending.
Yeah.
So you put them in as a bracket next to it.
Yeah.
I'm just going to write them in the column and update it if we need to do any adjustments.
2880, 74,600, 49,640, 1340, 4440, 52, 13,600 and 36,000.
Okay, and that will be a bracket over here, but I'll just update these if we need to change it. Okay, so that's good. You've got the right approach. You've covered that bit now. Now the hard part starts. What must we do? Oh, don't forget the drawings.
Yeah, drawings is drawings.
But where does it go?
So see statement of changes in equity.
Yes. Drawings?
48,000.
Nice. Okay, now we've done that, which you've covered in terms of interpretation. That's the approach. Now we need to look at the adjustments. Okay, prepare the statement for profit loss. We've done that. Well, we're going to do that.
Yeah.
That we've obviously created that. We've created that. Prepare the notes. Okay, here they wanted the notes. No adjustments here, so that's nice and simple. Right, so there aren't any adjustments in this activity. What am I going to do?
Just total everything.
Just total up.
Oh, I wish I get one like this in my exam.
Yeah, you won't because they'll give you adjustments. Yeah, so profit for the year, which we need to get. So we can literally just total up and tally up everything here.
Nice so other income is 0.
Yeah, you'd have naught there. Again, I like to use 2 columns, so we'll put 2 columns there. Services rendered 313,580, and then the expenses would literally be the sum
of all of those added together.
Yes, and then that gives you a profit or loss, which is bigger.
You have to say that minus that, and that gives you the profit or the loss for the year.
Yeah. What else must you remember with the expenses? This needs to be in a bracket. Do you agree?
Yes, because it's negative.
Yeah, I'm just going to show it in red because I can't show that as a bracket.
But then it's going to be 313,580 minus 187,700.
Yes. Okay, profit or loss? Profit for the year. Right, and this is going to be referenced where?
Statement of changes in equity. So see.
Good. So that needs to be recorded in there.
For the profit of the year, yeah.
Exactly. Okay, that's from the statement of comprehensive income. That's pretty much where you're getting it from. Alright, so that's going to come from there, and there's the amount.
Yeah.
Okay, last bit here is just to tally up. Drawings, you know, is going to be a negative. So 48,000 is a bracketed figure. And then to get this figure, how do I get it?
The top minus the less drawings.
Well, plus this.
Oh, do you have to, okay.
Because what does the profit do to the owner's equity?
It increases it. Exactly. Okay, and then you have to minus the 48,000.
Exactly.
And that gives you the balance.
Yeah, and where does that go?
Onto the same financial position by the equity.
Correct. Okay, that's good. Right, so now this figure, I'm going to take and I'm going to move that to under equity. Capital. Right, and that's it.
Yeah.
All we need to do is neaten up this.
Yeah.
So vehicles, do you agree this is going to have to be calculated?
Yeah.
Right, so I'll have a figure there. I'll have a figure here. And 50,000 over there. Distance. Okay, and then non-current will be those.
All three added together.
Added together, good. Okay, that plus that plus that. Current, those amounts stay the same.
And then to get your current, you have to add them together. And then you add the non-current and the current together, and that gives you a total assets.
Good, yeah. So that would be the sum of non-current and current.
Yeah.
Perfect. So that gives you the total assets.
Yeah.
The last bit is just to tally up this. We didn't have any of these other accounts, so a lot of that can go. We just had one little bit there for your payables. So equity, well, capital should actually go this side. And then I would put the equity there. Liabilities will literally just be this, which is the 660,
and then
non-current will be 0,
and then it's going to be 15860 or whatever plus 660, yes. And that gives you the total
159,340, 159,340. So you can see that balance, because you've been given everything. You actually might get a question in this exam that will have everything, and the only reason why I'm saying that is because
I need to try and make up.
They've only got 6-7 chapters to test, and they've got a 2-hour paper to give you. So I do think they'll probably give you a more holistic question where you'll have like more than less in terms of like this disclosure. Okay, so that actually went really well. So that's great. Right, so let's see how you do in terms of approaching one of these. Okay, so I'm just going to check what you did for the other 2 exercises, but I want you to create.
You just told me to do the workings.
Yeah, but I want to see your approach now, like exam technique, like starting it from scratch. But let's first test what you did. So number 2. Okay, there's number 2. Just go down the list and tell me what these things are.
Capital is capital.
Okay, let's check.
I did no. You didn't tell me to do that. You just told me to do the
the adjustments. Yes.
But I'll tell you this. Capital's capital.
Okay, so let me just see how many adjustments does this one have.
12.
Okay, this one had a lot. Okay, so I think you create the solution for this one. Okay, in terms of practice, as we go through it, I want you to create the answer. So let's see the additional information. What must we do? Don't worry about journals. Don't worry about closing entries. Let's focus on profit and loss. Okay, disclosure. Profit and loss, statement of change in equity, financial position. Journals are easy. Why are journals easy to do?
Because you just put in the debit or credit.
Exactly. That's what we've been doing previously, and that was your adjustments. Okay, so I will check your adjustments when we discuss the adjustments. Let's create those statements. Right, so 2 statements. Okay, so you're telling me what to do with this question. Okay. Where do you want to go?
So you need to first state which ones they are. All of them.
Okay, so where do you want me to go? Here?
Yeah, so fine. Capital is capital.
So what do you want me to do with that now?
That goes on the statement of changes in equity.
Okay, so I want you to do this question like an exam question. So everything that you're saying, do it as you go. So now this is the question you are given. Okay, I'll move it up and down in terms of the adjustments or the trial balance. You can tell me what you want to look at, but am I going to draw up everything? Yeah. So in the exam, what would you do? One page for that?
Yeah, and then
create another page?
I just want to, so it's going to be
you can sales. If you want to write sales and cost of sales, that's fine, as a general template.
Yeah. And then it's also gross profit.
Yeah, I want to see the exam technique. I want to see your actual process. So you're completing one from scratch, and we'll discuss the adjustments. Okay.
Then what's the next one? Statement of financial position.
Yes, so we're going to draw up all 3. Obviously, the textbook examples, study guide examples are complete.
Yeah.
They give you everything: the journals, the ledger, the statements. Okay, so they are very good examples to look at in case you forgot any of the basics from 1502. 1502 would have covered journals and ledger. This module is looking mainly at the disclosure. Not to say they can't test those other things though, but those things should be relatively easy to do. Okay, yeah, see, that's good. So you're getting your general templates. That's a good place to start. So what you're doing is what I would also do. I'm just going to take our example here, copy it, okay, and then I will use this. Right, so let's get rid of all this stuff. Okay, so drawing up your template is always the first step.
Yeah.
It makes the question so much easier if you've got something to work with. And that's the only reason why I'm encouraging you to do it this way, because at least you have something to work with in the exam, and it's not just trying to create something from nothing. At least you've got some guidance regarding the contents. Okay, yeah, like all of this needs to go, and then we'll update it with the right stuff. Okay, so I like what you've started with here. You said sales, cost of sales. I'm going to put that in already because you've done that as well. Cost of sales, and then you also had the gross profits. I'll add that as well. Okay, are you ready to look at the question now?
Yeah.
Okay, so now where do you want me to go?
So in the beginning, so capital is capital. It gets shown on the statement of comprehensive income. Changes in equity.
Okay, so show it. Answer the question. If you were doing this in the exam, what would you do?
So capital is is it a sole proprietor?
Yes.
So then capital is going to be here.
Your capital should actually be one step up because your balance needs to go there.
Oh,
but
okay.
It's,
okay.
Yeah. Because that's the heading. Like this one here. Let's just show that. Like that. So heading and then balance.
And then balance. Yeah. Perfect.
Okay, so
then you're gonna
insert.
go, and then you're gonna go land and buildings.
No, you haven't gotten your mark.
So capital goes there.
No, you haven't gotten your mark. You read this, you told me what it was. Now what are you going to do to get your mark?
Oh, you're going to put it at the beginning. So it is 40, so it goes there.
Okay, that's better. Okay, now you get the mark.
425, 100. Okay.
Where do you want me to go? Back
and
here.
Then you go back, and then land and buildings is the statement of financial position. It gets put under non-current assets.
Okay, so you insert it first on your answer, and then I'll update my answer. Okay, so that's a good place to start. Okay, I see you've written this in.
Land and buildings, so that amount is 879,720. Then revaluation surplus. Okay, that can't be a something.
What is it?
Isn't that how much extra you got on your capital?
Almost. It's a revaluation that would have been done on a asset.
Okay.
Okay, so assets generally get revalued.
Okay.
Depending on their
how long they've been used for.
Yes, their age.
Yeah.
It's like property right now. So currently what's being talked about in the news is property prices are getting revalued in terms of the municipality because the municipality wants to charge rates and taxes going forward. So they want to review the rates. So that would be a process of revaluation. All right. So if there is a surplus, how would you view that as? An asset, a liability, income, expense, capital drawings?
Wouldn't it be expense?
It wouldn't be an expense. It's a surplus so that you get something.
It's an asset.
It's kind of an asset, but it's not quite, because the revaluation would have arisen from the asset. Notice what balance it has. It can't be
It can't
An
be an
asset.
asset because it's
Because
so
it has
it
a
can be a
credit.
liability.
But it's not.
Income
No.
increases on the credit side. Drawings, no. Capital.
Yes, it's a form of capital, but it's treated as what? Owner's equity, yeah. So you can't say it's capital. It's a form of capital.
Yeah.
Right. It's more the owner's equity because it relates to capital. Not capital. It relates to an asset that was revalued. So looking at that, when I see this, I'm assuming that the land and buildings was probably the one that changed value.
Yeah.
Right. Because they said at valuation. Right. And this was when?
The 31st
Yes,
December.
which is when? At the
end
of the year. But notice it's pre-adjustment.
Yeah.
So I need to still adjust for the differences.
Okay.
Okay, so where am I going to put this if it's got a credit?
By the capital.
Yeah, so you should show it here in terms of equity, right? You would show it as part of that. And I would show it as part of the SOCI. Okay, just as an additional column. Right, it's unusual to see more columns in a sole proprietor question, but only because the land and buildings was revalued would this be applicable. Right,
okay.
So revaluation surplus. Okay, and we read it as being 90,000 at the balance at the beginning of the year. Was it 90? Yeah, it was 90. Okay, and then I would have to remember to include that here because I would have capital and I would have a revaluation surplus. Right, so yeah, so that might have been something a little bit new or different, but just to recap and revise in terms of the actual disclosure, okay, the how we present information. Okay.
Perfect. And then vehicles is a non-current asset.
Okay, so you insert first, then I'll update mine. Okay, that's good.
120. Equipment, it's the exact same. That is 27,000. Accumulated depreciation, so you're going to have to minus it from the vehicles, so it's going to be 120,000 minus 33,600. And then 5,130 from equipment.
Okay, so far so good.
Fixed deposit is an asset. No, fixed deposit.
You get stuck, always go back to what something is.
It's something. It's capital.
It's not capital.
No, it's not a liability. It's not an obligation to pay. It's not an expense. No, it's not an expense. It's an asset.
Yes.
Yeah.
Which one? Non-current, current.
Non-current because it's longer than 12 months.
So where would you put it?
So it will be under the non-current asset. $150. Trade receivables is another name for debtors, and it goes.
You missed one.
Inventory. Yeah. Inventory is a current asset.
Good.
$25,500. Trade receivables is a current asset. It's another name for debtors. $15,600. Bank is a current asset. That's now 3. Petty cash is a current asset. That is 300. Cash float, isn't it also like petty cash? So it's also going to be a current asset.
Okay, good.
Mm, 1,500. Trade payables is a current liability. Trade payables is 26,400. VAT, okay, VAT is expense.
You need to look at what it is as a balance. That could be either
Capital.
no, an asset or liability. Which one?
It'll be a liability because it's got a credit balance.
Yes. Okay, so remember VAT is something that you owe who? SARS. Okay, you collect VAT to pay over to them if you're selling goods.
Yeah.
And if it's got a credit balance, it's a liability.
Yeah.
So where would you put it?
On the current one to also be a current liability.
Yes.
$2,250. Long-term borrowing, so that's a non-current liability. And that's 75,000. Allowance for credit losses. It's a negative asset.
Good. Where does it get disclosed?
On the credit side of assets.
Well, yes, but against which assets?
Bank.
No. A credit loss wouldn't arise because of the bank.
It would be a debtor.
Yes.
So then it'll be trade receivables.
Yes.
So then it'll be minus 900.
There we go.
Sales, you have to put in the sales, so that goes to that off from terms of income, so the sales amount is 1145370. Cost of sales, they give you the formula, they give it to you so you don't have to work it out.
So what system are they using?
Periodic.
No.
Perpetual.
Yes, because it's given.
Oh, okay.
There's no purchases or
returns or
yes. Well, there could be returns, but not purchases
yeah.
returns because purchases relate to a periodic system.
Yeah.
Okay.
So it's 496,200. 496,200. Sales returns. Isn't that seen as expense?
Yes. Where would you disclose it?
Statement of profit or loss either compared
Where
to
though?
At the expenses.
No, you wouldn't because it's specific to the sales.
So then won't you minus it off the cost of sales?
No, not the cost of sales. The
okay.
sales, yes, because it's a sale return.
Okay.
So disclosure, it would be better to subtract it from there.
So it's 36. Wages, expense, salaries, expense.
Yes, so where would they go?
Other expenses.
Yes, okay. 6,075.
Assessment rates. Expense.
Yes. 4,500. Let's call it rates.
Settlement discount granted. You granting it to your creditors, your debtors.
Yes.
So won't it be seen as expense?
Yes.
So you have to.
Yeah. So you can put it under expenses, but I see unisa tends to show it against the sales.
Okay.
Because it relates to your debtors.
So, yeah.
In terms
so
of credit
minus
sales.
it from there.
Yeah, that's what I've normally seen them do. Let's see if they've done that as well here. Revenue 144. No, they haven't. So they must have shown that separately. If they didn't show it there. Do you see a discount here?
Doesn't seem like they accounted for it.
This was 2.2. They must have, because that's 1140. What was our discount amount?
1140.
What's the sales? Where's
The
sales?
sales is 1145.
Okay, so see, they did account for it.
Okay.
So sales returns is taken out of that. Okay, sales returns. Sorry, sales returns and the settlement discount.
Yeah. 1140.
1140. So there we go. We need to take it out. I didn't show the working in their solution. I'm going to show it in mine. Minus asterisk. Well, let's put the amount first. What is it?
1140.
1140 asterisk discounts allowed. Does that make sense?
Yeah.
And now if I then take these figures
and add them together, you should get.
Now let's have a look and just check. Yes, see, 1140 630. See, they just didn't show the brackets.
Yeah.
So now if you had the printed study guide, I would have shown bracket here, show that working, so you know.
Haven't been delivered.
Yeah, that's fine. I'm just saying that. Just make a note in terms of how they do it. So I've seen them do that often in terms of disclosure. Right? There's nothing wrong with doing it that way. It's actually it's a presentation line item. That's all. Okay, let's go back to the question.
Licenses is expense.
Right, no. Licenses. How much? 3,000. Okay, next.
Vehicle expense.
10,500.
Credit losses is a negative asset.
No. An allowance for credit losses is a negative asset.
It's expense.
Yes. Okay, remember it has a debit balance. Always look at the debit or credit as a clue.
Up.
Credit losses goes where?
Expense.
Yes. What's it? 1650.
Packaging expense.
Correct. 14,100.
Insurance, water, telephone, all expenses. Those are all expensive.
Yeah, good. So insurance 6750. 6750. Next one, water and then telephone. Water and then telephone. Okay, the water and electricity 63. The insurance, not insurance, the telephone
42.
Yes. And then you've got advertising. No, yeah, we did telephone. Yes. Advertising 6,000.
Then rental is income.
Goes where?
Income.
46,800. 46,800, I think I said it.
Yeah.
46,800, yes.
Settlement discount received is also income.
Yes. Okay, but again, in terms of disclosure, where would they show this? Probably against cost of sales.
Yeah.
Because what do you buy on credit? Goods.
Yeah.
So whether they do that or don't, we need to double check.
Okay.
Right, but I would be inclined to show this as a separate
Yeah.
line item, but it all depends on unisa how they're going to show it. So just follow their method of doing it. So let's double check and see if they've closed that off to the right account. Let's see their cost of sales. Alright, so here they've got cost of sales as 494,250. What is our current cost of sales?
496,200.
Okay, so it looks like they have taken it off.
Yeah.
Alright, so let's go back and look at that amount. There's discount received. What is it? 1950.
Yeah.
So we're probably going to take off minus 1950 from that. Okay, let's see what we get then. Uh, 494,250, is that what we had in the answer? Let's double check.
I think so.
Ooh. Yes, see? 494,250. So again, in terms of bracket, they would have done that. Alright, so just be careful with that because they're actually using the discount as a way to reduce the cost of sales. Okay, this one.
It's an income.
Yes. Interest on investments. How much? 15,000. And what is credit losses recovered?
Income.
Correct. 360. Okay. So now you've got all of the easy marks. Right, and it's easy only because you know your rules.
Yeah.
Okay, in terms of what is an asset, what is a liability, what is income, what is an expense.
Yeah.
If you know those 4 rules, then you can identify what these things are and then get marks for transferring it to your solution. Okay, like what you did there. Right, now the next part is the tricky bit, which is what I asked you to look at in terms of the adjustments.
Yeah.
Right, so what did you do with adjustment number 1? What did you say we had to do?
So packaging material on hand was valued at 2940. Let me check that one. I don't know how accurate I am. I said
well, fine. Just,
debit,
yeah.
packaging material.
Okay, this is packing material.
It's expense.
On hand.
Okay.
So what does that mean?
It's stuff that you got to sell.
No. Okay, first start with packing material. What is it?
It's expense.
Good. Have I used all of it?
No.
So what does that mean?
It's not yours, so it's not an asset.
Yes, so this is one of your adjustments. Remember we did an adjustment for stationery. Stationery on hand is what?
An asset.
An asset. So packing material on hand is?
Asset.
Yes, which type of asset? Current or non-current?
Oh, current.
Current. Have you used all the packing material?
No.
So is your expense too high or too low?
Too high.
Yes. So how do I get rid of the...
Expense has to be credited.
Well, reduced. Yes, credited or reduced. So where's packing material? There's it. What am I going to do to it?
You're going to minus 2940.
Okay, there's 1/2 of the mark. So that you need to cross off. That's not right. Okay, just make a note here. This is what?
An asset.
Yes, that's the first step. Packing material on hand is an asset. And it's an adjusting journal entry.
So then it would be credited, so packaging material would be credited.
Packing material would be credited, yes. The debit would be for the assets, exactly. Okay. Right, so you've got the packing material here, that's going to decrease, right?
Yes.
Okay, and then where am I going to put it? I'm going to show it here. I need to add another line. There you go. See, now you're getting your marks for that. See, then, 1 by 1 by 1 by 1. Okay.
Then the next one, I said Okay, the long-term loan borrowing was entered on the 1st of October 2017. According to the agreement, interest is payable biannually at a rate of 18. So I said debit bank.
Why?
Because you're paying for a loan, you borrowed money. You know your bank is increased because you got money.
Okay, what are they talking about? Are they talking about getting a loan, or are they talking about something else?
Well, it says long-term borrowing was entered, so you did get money.
Yeah, but when did it happen?
On the 1st of October 2017.
What date are we sitting at?
31st of December 2017.
So
So
what
you
does that
still
tell
got it
you?
throughout the year though?
Not throughout the year, for part of the year.
Yeah.
So when did we take out the loan?
The 1st of October.
So how many months do we have the loan for?
October, November, December, 3.
So what am I going to do with 3 months?
You're going to account for it.
Account for what?
The interest.
Good. So how am I going to account for interest on the loan?
So you take the loan amount.
Good, which was what? What's the loan amount? It should be in your
75,000.
Okay. And this is interest on
Loan. So it's 75,000 times 18%.
Was it 18%?
Yep.
Okay.
Times 3 over 12.
Yes.
So
That's better.
That's going to be 75,000 times 18% times 3 divided by 12. So that is 3,375.
Okay. Now what do I do with that?
Don't you have to do it against your... You go to your capital and you minus it from the 75,000.
You can't. Because the 75 is a loan.
Yeah.
What is this viewed as?
Expense.
What type of expense?
Payable expense.
So, what do we call an expense that's payable?
A liability.
What type? What's the name for the liability? You're right. You just need to.
Expense payable. I mean,
accrued
liability.
expense.
Okay.
Okay, so you would show an accrued interest expense line item there.
Okay.
Accrued means hasn't been paid.
Yeah, it's not a...
That's for the low interest. Okay, and that would be for an amount of...
Going to be 3,375.
Yes.
Yeah.
Right, so see, there's your double entry.
Yeah.
So what did you say for this in terms of your workings?
So I said, I don't know if my workings was right because of how I explained it, but I said debit bank, credit long-term loan.
Yeah, you can't do that, okay, because you're not getting any cash.
Yeah, I read it wrong.
Yeah, you're thinking about what happened on the 1st of October,
Yeah.
not what's happening at the end of the year.
Yeah.
Okay.
But I understand it.
Yes. Alright, so insert.
Okay. Oh, there we go. Accrued interest.
Yeah, remember it's an adjustment. It's an accrued expense adjustment.
Yeah.
You're creating a liability because of interest that's still owed on the outstanding loan.
Yeah. So it's 3,375. Perfect.
Okay.
Then,
So that one's fine. Now we need to look at this one.
okay. Then I said advertising includes an amount paid. Okay. I said because advertising is expense, it's still there. It's increased because you're still owing it.
Not owing it.
Because it needs to be paid on January 2018.
Yeah, but when is January 2018?
The following year.
Yes, the following year. So,
but it's still obligation to pay though.
Where do you get the word obligation to pay?
Because it's advertising as expense, you're still owing. Because it says there includes an amount paid.
So when
it's a
did you
prepaid
pay?
expense.
That's better. Now you've got it.
So then,
what is a prepaid expense? What type of account is a prepaid expense?
an asset.
There we go. So if it's an asset, would it have a debit or a credit?
Debit.
There we go.
So then it's going to be prepaid expense.
Yes, it'll be debit prepaid advertising expense and credit what?
Bank.
No, you're not paying for it. You've paid for it.
Then it's going to be advertising.
Yes. Yeah. Okay, you're decreasing the expense. Okay, so let's show that. Let's put the prepayment in.
What is that?
Current assets. Prepaid advertising.
Current
advertising
asset.
expense.
Oh gosh, I've got no space.
Yeah, so that's why in the test you need to leave enough lines.
Normally do.
Don't be afraid to use more paper and all of that, just in case. Hopefully it won't be as long as this exercise, but I'm just saying leave enough space in case. 1,200. Okay, 1,200. Asset, current asset, because the expense is too high.
Yeah.
What am I going to do to the expense?
You're going to decrease it.
Correct. Where's advertising? There's advertising. So less 1,200. 1,200 is for the advertising.
Okay.
Okay, makes sense.
Yeah. Okay. Rental income includes an amount in respect of January 2018. Rental income was earned, so that's a prepaid expense. It's income. So prepaid income.
Yeah. What is prepaid income? Not prepaid income.
An asset.
No. Prepaid income. Another word for prepaid income would be
Accrued. No.
income received in advance.
Okay.
Okay, so prepaid income and income received in advance mean exactly the same thing.
Okay.
Okay, if it's prepaid, what am I going to do to the income?
You're going to increase it. You're going to decrease it because it's already been paid.
Well, received.
Yeah.
Yeah, so just be careful.
So then you're going to debit it, so
yeah.
it's going to be prepaid.
Yeah, just be careful if you refer to it as prepaid income.
Okay.
Because then you are going to confuse it with prepaid expenses. Right, so it's better to rather use the other name, income received in advance. If I receive rent in advance, is the rent for this year going to be too high or too low?
Too high.
Exactly. What am I going to do to the rent then? Decrease it.
Yeah.
So you have done what to the rent? You've increased it, so that's wrong.
So, but won't prepaid income be debited as well?
No. What type of account is prepaid income?
Asset.
Rather call it income received in advance.
But it's an asset.
It's not an asset.
It's income.
It's prepaid income. What is prepaid income? Another word for income received in advance. So income received in advance is what kind of account?
Income.
Think about it. If you get income in advance, good or bad?
Well, it doesn't really matter because it needs to even out, so it's good, I guess.
But what are you going to view it as? That's the question I'm trying to ask.
It's expense. No, it won't be expense. Income.
Think about it. No, think about it. So you get income today, but you haven't done anything yet.
So it's accrued. It's prepaid. It's income received in advance.
Correct. And income received in advance is what? Which one? Asset, liability, income, expense, capital drawings.
It won't be expense.
It's not an expense.
Capital.
It's not capital.
It won't be drawings.
It's not drawings.
Liability.
Yes. Okay, so how is income received in advance a liability?
Because you still haven't earned. You
have an obligation to
work for what
create the product or service, or
for that money.
Return the money received. Exactly. Okay, that's better. All right. So what am I going to do with this?
Nothing, because it's for the following year.
No, I'm not going to do nothing with it. I've already provided for it.
Oh, then you're going to have to minus it from the rent income, however much that is.
That's better. Okay, so go to rent income, and you're going to subtract how many months? 1 month worth of income. So this 46800 is representing how many months?
13.
13 months. So I'm going to subtract 1 month worth of rent income because I only have to show 12 months exactly.
So that is
43,200. Final answer. Okay, so now what does that do? It creates a income received in advance adjustment.
Yeah.
So the amount that I need to adjust for is how much? Let's see. 3,600. That's how much we're charging
per month.
Per month, exactly. Okay, because if you times this by 12, you're going to get times 12 that amount.
Yeah.
Okay. Right. So what am I going to do with this? I'm going to disclose
liability.
Yes. That is going to go
current though.
Correct. Yes. So where's our liabilities? There's it. Let's put it in. What was this rent? So prepaid, not prepaid. Rent income received in advance. 3,600. That was the right amount. Let's go back and check. Yes. Okay. Right. So that's what you had to do for that transaction. What did you initially think?
I'll say
bank and rent income. Be careful. Okay. So see, I can already see you're struggling a little bit with the adjustments, but the adjustments that we've looked at in terms of prepaid expense, accrued expense. What is a prepaid expense? What type of accounts?
Asset.
Good. What is an accrued expense?
Liability.
Why?
Because it's an obligation.
Yes, you haven't paid an accrued expense. So give me an example of accrued expense.
ESCOM.
Yes, you use the water and lights this month. You only pay for it next month.
Yeah.
Right. Accrued income is what?
Expense.
Accrued income. Accrued means, what does the word accrued actually mean? Let's talk about that.
Money
still owing or still outstanding.
So isn't that a liability?
Accrued income isn't.
Asset.
What does accrued income mean then?
It's owing to you.
Income still owed.
Yeah.
So if income is still owed, seen as a asset. If you're still going to be getting income, it's outstanding, meaning you are going to.
But it's an expense for the person paying you.
But you're never looking at things from their perspective.
Okay.
You're always looking at things from whose perspective?
Your own.
The business.
Yeah.
Okay, so the business is what we're accounting for. So what is this viewed as? A liability, because this was income received in advance.
Yeah.
But now what we're talking about is accrued income, meaning you've done something and you haven't received it.
Yeah.
Is that a liability?
No.
It's an asset because you're still going to receive. Because if you've done something that needs to be paid in the future, it's a benefit, it's a resource. Okay, so that was the one, and then we just spoke about the other income received in advance. Okay. Right, what is this one? What did you do with that?
Interest on fixed deposit has not yet been received for the last 2 months of the financial year. Interest on fixed deposit, that's number 5. I don't know if I'm right. I said debit bank.
Okay, was there any cash that was received?
No, and that's what's confused me.
Okay, so that's out.
Yeah.
Try again.
So interest on fixed deposit. So won't you debit fixed deposit?
Explain what's happening here.
Interest on fixed deposit. Fixed deposit is a form of savings for your company. Interest on the fixed deposit has not yet been received. So you have not received the interest owing to you on your fixed deposit.
That's better. So how are you going to account for that?
So it's going to be, well, whatever your fixed deposit amount is, times 12%.
Good.
Divided by, times 2 divided by 12.
Times 2 divided by 12. Yes, okay, I'm happy with that working. So you've got the right answer. See, that would have been part of your working together figure for the calculation for the disclosure. So where's interest on investment?
So then it's
asterisk. What was the fixed deposit?
15, I think.
Where was it again? Okay, there's at the top. 150.
Oh.
Okay, yeah. So 150
times 12%.
Yes.
times 2 divided by 12 gives you 3,000.
Yes. Okay, so what is that 3,000 representing?
It's money owing to you.
Exactly. And what do we call money owing
An
to you?
asset.
Well, yes, but what's the right name for it?
Accrued
What?
income.
Yes. Okay, so accrued income goes here under the assets.
Oh my god, there's like no space.
Right, yeah, and that's why I just keep more space in the exam.
Yeah.
Okay, but I'll write it in there. Accrued income bracket 3,000. Right. Where else must we put that? Here.
Yeah.
Too much or too little?
Too little.
Too much.
No, it's still owing to you.
No, you're right. Sorry, that's my mistake. You're right, because it's still owed to you. Correct. So it is too little.
Yeah.
So it would have to go
up.
Up.
So it would have to be debited. Credited.
Yeah, plus. You'll add, well, how much was
3,000.
Okay, there we go. Yeah, that's better. Okay, we can check it. So we can do this. 150,000 times 12%, because that's the whole year.
Yeah.
18,000. Yes. Okay.
Yeah, okay. That makes sense.
Because that's how much they should have received
Yeah.
for the whole year. Right, keep going. Next, what did you do with this one?
6. Insurance includes an amount of 2,258 paid for a period of 1st November to the 31st. So they prepaid expense.
100%.
So your expense will come down
Good.
because you paid for it.
Good.
So, so expense is increases on the debit. So it would be the insurance will be credited.
Good.
So then it's going to be prepaid expense, and then
Debit or credit the prepaid expense?
credit.
What type of account is prepaid expense?
An asset.
Yes.
Okay, so I was right when I put insurance there.
Yeah, so prepaid expense would be the debit, and what would the credit be?
It won't be bank.
It won't be. There's no cash.
Won't it be insurance?
Yes. Okay, because it's an expense that's decreasing.
Yeah.
Right. So where's it? There's it. How much? We need to work it out. Okay. So let me ask you to work it out first. Let's see what you get, and then I'll do the working.
So it's 2250.
Yeah. Try. I want to know what the adjusting amount is.
Insurance includes an amount of 2250.
And this would definitely carry a mark
so
because it's calculation.
It's prepaid expense. So won't you have to minus that from the amount?
Yeah, no, we've done all the counting bit. I just want to know what the amount is. How much do I subtract?
2250.
No. 2250 was paid for the period 1 November to 31st October.
You only need to subtract for the 12 months. So won't it be the first and won't it be November and December you have to account for?
No, November and December you would have to keep, so you wouldn't have to adjust for it.
So how many months are there? There's November, December, January, February, March, April, May, June, July, August, September, October. So that's 12 months. So you're gonna have to subtract 10 months. So won't it be 2250 divided by 10 or divided by 12
times
10?
Well, times by 10 gives you the amount that you incurred. So
it's
see, you're thinking about stuff which is right. I would prefer if you actually jot down a working, because in the examiner's not going to be able to sit down with you and hear what you're thinking. Like now I can understand what you're thinking, but if I had to give you marks for it, I want to see it on paper. Okay, so if you want marks in the exam, I would do this. Working. Okay, I would do this. 2250 for how many months?
That's 12.
Yes. Do you want 12 months?
No, you want 10.
Yes. So then what do? Just split it. Okay, and that makes life a lot easier than trying to mentally comprehend what's happening. Okay, you might be able to do it mentally in one step. It's just more challenging to, and then you sort of get confused with the numbers. So 2250 times 10 over 12 is going to give me the amount that I actually prepaid.
Yeah.
And 2250 times 2 over 12 is going to give me the amount that I paid. Okay.
So that's 1875, and then the other one is 2250 times 2, and then 375.
Okay, so what am I going to do with 375? Leave it. What am I going to do with this?
You're going to add it.
Minus it.
Okay.
Okay, why?
Because it's been prepaid, so it's too much.
Exactly. Where's insurance? There's insurance. What is the amount?
It is 1875.
Okay, there you go. Right, and where else am I going to show the 1875?
Why will it be
Prepaid expense.
okay?
Okay, so you have to show
so
things.
Much here.
Yeah, there's a lot of prepaid expense. You can group them as one actually if you wanted to.
Okay.
I prefer keeping it separate so you can see every single working. What expense was this? Insurance.
Yeah.
Okay. Prepaid insurance brackets 1875.
Yeah.
Right. So there's another adjustment. We've read it. We can understand that that's a prepaid adjustment. Okay. Next.
Okay, 8. Equipment of 6,000 cost price was purchased on the 1st of July.
7.
The telephone account of 495 for December has not yet been paid. So a telephone account is expense, hasn't been paid, so it's increased. So it increases on the debit side. So won't a telephone account be debited? Then it won't be bank. It will be expense. No.
Yeah, which expense? What expense? Be specific. What happened? Always understand what happened.
Telephone account owing.
Correct. So what is that? Yes.
So accrued telephone expense.
Yes, there you go. Okay, so debit the expense because it's too little, it's outstanding.
Which I've done though.
Credit the telephone
expense.
Accrued expense. Okay, there we go, that's better. 495. See, as long as you understand what happened, it's just determining what actually happened and then adjusting for it. So let's fix and adjust. Let's go fix it here first. Where's telephone?
At the bottom.
There.
Yeah.
Too little, too high? Too little.
Too little.
Add how much? 495. What is that? It's an accrued. It's an accrual. It's an accrued.
So it's a current
telephone expense, which is a current liability. Good. Okay, so under current liability, accrued telephone expense. What is it? 495.
495.
Okay, here we go.
Equipment of 6,000 was purchased on the 1st of July. So it increases because it's equipment. It increases on the debit account. So equipment is debited, bank is credited.
Correct.
Because it's a cash purchase.
Yes, in this case. Well, how do you know it's cash?
6,000 cost price. It just it didn't say credit sale.
Yeah. No, well, it could have been cash or credit actually. The thing is, we just bought equipment in the past. Will I record that?
No. No,
but I would show the movement in a PPE account. So I wouldn't do it here because I haven't done that. What equipment? This is equipment. So just an asterisk here. PPE would show the movement in equipment. Okay, if I'm showing everything on the face of the statement, I'm not going to show that. But what I am going to show is the depreciation.
Yeah.
So am I going to need to draw up a timeline for this? Yes. So what is the start of the year?
The 1st of Jan.
End of the year?
21st.
Okay, what happened during the year?
He bought equipment on the 1st of July.
Good. So that's mid-year. So if it's mid-year, how many months did I have the equipment for?
6.
Yes.
Half the year. So 6 divided by 12.
Yes, and that affects the depreciation. How much was the asset? 6,000. Okay, so 6,000 new was bought on the 1st of July.
Yeah.
Have I used it for the year?
You've only had it for 6 months, so
I've only had it for 6 months.
The whole year. No.
Exactly. So depreciation
will be 6,000 times
whatever percentage it is.
10%.
Diminishing balance doesn't apply for a new asset.
Yeah.
Because it's a new asset. There's no accumulated. So times 10%.
10 divided by 6 divided by 12.
Yes. So 6,000 times 10.
So that's 60. So
300.
yeah.
Right, so that's depreciation that you need to provide for. Where am I going to show that? Against the equipment?
Yeah.
And where else? Comprehensive income.
Okay.
Remember you had depreciation here?
Yeah.
Did you have depreciation? No, it was the other one.
Okay.
The other
yeah, the other one we just worked out.
Other question had it, so we need to insert it. On equipment. 300. Right, was that the only equipment you had?
Yes.
No, it wasn't.
Well, that's only equipment you bought.
Yes, so there's still equipment that exists. So where's the equipment balance? There's it. This equipment, where was this balance sitting?
End of the year.
At the end of the year. So at the end of the year you had 27,000. So let's draw that on our diagram. Okay, this is for what? Equipment.
Yes.
So in terms of equipment, what is the balance at the end?
27,000.
If you bought new equipment for 6, what would you have started with?
0.
No.
Oh, 27 minus 6.
Yes. Okay, I would have started with 21,000. Then during the year I buy 6 and I end with 27.
So you started with 21, yeah.
Okay, did you hold this for the full year?
Yes.
Would you depreciate it for the full year?
Yes.
Okay, there's the other half. See, that's a little diagram that I would be drawing as my workings. Right, so depreciation, does this have to use the accumulated depreciation?
Yes.
Why?
Diminishing balance.
Exactly, diminishing balance. So diminishing balance would be what I had at the beginning of the year, which was 21,000, less the accumulated at the beginning of the year, which was how much? Where's equipment? There's it.
5,130.
Yes, 5130. Close brackets times 10%. Okay, it gives me 1587. Where is that going to go?
On the equipment.
So yes, so minus 1587. And I'm going to write the same amount where?
On the depreciation.
Yes, 1587. See that?
Yeah.
Okay, so now we go back to the question. So the equipment was purchased. We've looked at that.
Yeah.
We've looked at the equipment here. Have I looked at the vehicles?
No.
No. So what am I going to do with vehicles?
So you're still going to debit it?
Debit what?
Vehicles?
Vehicles. No, I won't debit vehicles. That increases an asset. I'm not increasing the asset. What am I processing for the asset?
The diminishing balance.
Depreciation. So where do I put depreciation for the vehicle?
On the vehicle amount.
Yes. And how much is it?
So
20%.
Yeah. So the vehicle.
Yeah. What was the vehicle cost price?
So it was 120,000.
Okay. Times 20%.
Times 20.
Oh, be careful.
But also we have to.
Diminishing balance.
Okay.
Alright, so what does that mean? Diminishing balance means what?
You have to work it out.
Using what?
The diminishing balance method.
And what does that require?
So that's a cost
minus
the carrying value
accumulated to get the carrying value
times 20%.
Yes. Okay. So where is my vehicle cost? Let's find
120.
it. And what is my accumulated?
Accumulated is 33,600.
Okay. So let's show that.
So it would be 120 minus 33,600.
Yeah. Times
20%. So that is 113,280.
Why is it not adding? Oh. Still doesn't like it. Oh, brackets.
Because of the bracket.
Okay.
Okay, I didn't put brackets in mine. Let me do it with brackets. Yeah, 17,280.
Okay. Now what?
Then you're gonna have to account for it.
Where?
On
17 to 80.
Yeah. So it's minus 17,280.
Okay, and that's another one complete.
Yeah.
Right. This what happens here?
The account for Mr. Luce, a debtor who owes the entity 600, must be written off as irrecoverable. So credit losses is a negative it's an expense, but it's been increased, so it will be debited. So credit losses will be debited.
So where do we disclose that?
Expense.
Where do we show expenses?
On the statement of comprehensive income.
Good. So there's another note. We had credit losses earlier, I think.
Yeah. There.
So we just add to it.
Yeah.
How much?
600. Won't you mind? Oh yeah, you have to because
it's a credit loss.
Yeah.
It's an expense. Where do you show the minus?
For allowances.
Who didn't pay you?
The debtor.
Exactly. So minus it from where?
The debtor.
Exactly.
Okay.
Okay, this account is written off. A debtor owed, not going to pay.
Yeah.
So a debtor will decrease. A debtor would have a balance that's a debit. This will come down by 6.
Yeah.
Does that make sense?
Yes, it does.
Okay, and then we'll get a figure here. Right. Next one. Okay, you do this one while I plug in the power.
It was determined on the 31st of December the allowance for credit losses should amount to. So allowances for credit losses will be debited because it's increasing.
No. An allowance has what balance?
A negative balance. A credit balance.
Because it's a negative asset.
So then the allowances for credit losses will be credited.
If you're increasing it. Are you?
Yeah.
Okay. Right, so the current allowance was how much? There's the current allowance.
900.
What do you want the allowance to be?
It needs to increase to 750.
Not increase.
Oh, it needs to decrease.
It needs to decrease.
So then allowances for credit losses will be debited. Because it's decreasing.
Yes, because it's decreasing. Okay, so that's fine. As long as you knew what the original balance was.
Yeah.
Okay, so 900 needs to come down to 750. So we need to go back to this page. And we need to get rid of
decreases by 150.
Yeah, so minus here negative 150 close brackets. Okay, so this 900 needs to be reduced by 150 close bracket. Do you agree?
Yeah.
Okay. Right, and where else are we going to show that? So we've shown the adjustment for the allowance. So in your working, you said debit allowance and credit what?
Bank.
No, there's no cash.
Oh no, I got that wrong.
What are you crediting?
Credit losses.
Yes, okay, because that's the account that's going to be affected by this adjustment. There's credit losses. This is going to go up or down? It's going to go down.
Down, yeah.
So it's minus 150. Okay, and the last one? They use the perpetual. That's great. That means
It's just
no.
extra information.
Well, yes, but that just means no cost of sale calculation. Yeah. Right, so that's it. You've completed it. So all you literally need to do now is tally up all of those line items that had changed. Okay, and then you always start with this. Why? Because this is going to filter through to what?
The SOC.
Correct. And the statement of financial position.
Yeah.
So you always tally up what's in this account in order to get
financial position and SOC.
Yes, so some of these will stay the same. Telephone 4200 plus 495
is 4695.
Yes, this minus that. Okay, the rest stay the same, hey? Yeah.
Then 3000, then 4500, then 75,000, then 6,000.
Right, was that it? Let's just check. No, there's still one more here. Depreciation equipment. We need to add those two.
587 plus 300. That's 188.
Yeah, that's good. And then we just total up all of that. So sum up this bit. Okay, and then we need to look at the top bit. This interest did change. That was 18.
Then it will be 360.
Yeah, that's 360. And then total that.
Yeah.
Okay, and that's good. Obviously, it's other income. Here we've got a gross profit line item.
So it's sales minus cost of sales.
Yes, so that must be in brackets.
Yeah.
I'm just showing it as red as in negative. This minus that.
Gives you gross profit.
Yes. Enter. Okay, and then once you've got this figure, you're going to add that and subtract
minus
this.
That, yeah.
Good, so this bit here equals this plus that minus this gives us 552,648. Okay, so let's just check to make sure we haven't missed anything. Just to double check before we continue. Let's see. 552,648, is it right? That's right. Okay, and then obviously you could mark this.
Yeah.
Okay. Alright, so that looks good. So see.
Yeah.
Right, so that figure, copy it and move it to the SOC. Why?
Because it's the
profit for the year.
Yeah.
What does profit do to the
it increases
capital? Yes, wrong column. Be careful. Okay, we had two columns here.
Yeah.
Capital.
So it's that plus that.
Yes. Drawings though. Do we have any drawings in this question?
No.
Sure about that.
I don't see any drawings.
Even here, hey? Okay, if there's no drawing, that means they're not taking from the business. Yeah, there wasn't any. Okay, great. So we didn't allocate anything to the owners.
So that plus that gives you the balance for the year.
Yes, that's right. Okay, no drawings. Right, was the additional capital also not?
Nothing.
Those are other line items you could have here. Maybe just to show that then. Additional capital contributed. And drawings. Right, so the one you would subtract and that you would add.
Yeah.
But there's obviously 0 and 0 there.
Yeah.
Revaluation surplus would have stayed the same.
90,000.
And then this goes to the
financial position.
Yes. Alright, so I need to put this figure here in the statement of financial position under my capital.
Yeah. And then it's going to be 90,000 for revaluation surplus.
Yes. Oops.
And then 90,000, yeah.
There we go. Total equity will be the sum
of those added.
Of the two added together. Good. Okay, and then we're just neatening up here, and then let's hope it balances nicely.
So that's
879720 Let's tally all of that. Let's tally all of this. That's 150,000. Now we can add up all of that. Okay, that didn't change.
That's already been done. The others not.
Yeah, that was already done. This needs to change.
3,000,
Perfect. Okay, so then tally up the current. And then non-current and current gives you total assets. Right, gives me that figure. And then this is the figure that I'd be hoping for in terms of my equity and liabilities. Okay, and we'll check. And then if I've left anything out, we go back and we look or try fix the mistake. Alright, 75, that stays the same. This is 26.
And then 2250.
Yeah, and then just sum up.
All of that.
1778680.
Yeah.
There we go. Brilliant. Okay, so we didn't make any mistakes when we did this. Okay, and see, that's the approach.
Yeah.
All right, so in the exam, you're going to do the exact same thing. Right, remember, when looking at the scope, that was study unit 1.
Yeah.
Study unit 2, actually.
2, yeah.
Yeah, 1 was revision, which we looked at in terms of 1502. Okay, so 1 is all basics from previous modules, okay? And then learning unit 2 is what we just did now.
Yeah.
Right, where we actually took a question and we did the actual adjustments.
Yeah.
Alright, so I'm not going to do the last exercise with you like this, step by step. I want you to try to do that one. What I do want to look at, though, is the working that you did for the last one. Okay, so let's go and look at number 3 and see what your adjustments look like. That was 2, that's 2, where's 3 coming? That should be 3, yes. Okay, so you had this to analyze as well, okay, in terms of adjusting journal entries. This was a lot shorter. It's a good idea if you can, when you've got time, just to take the question, because you've started with it, and then literally recreate what we did here in terms of 1, 2, and 3. But notice how I did it. I didn't look at the solution. You look at that afterwards. That's how you need to approach it in accounting. Okay, in accounting, yes, you've got the solution. Yes, you've got the question. So you could literally just look at both. That doesn't achieve anything, because you need to try fill in the blank in terms of creating the solution. Right? Because in the exam, you're starting with nothing. Right? So you need to become more familiar with the process, and that's why I'm showing you this, because this is how I would be doing it if I was practicing for the exam. Okay, it's literally do the question blank with nothing, then check and see, well, did I make any mistakes anywhere? Okay, I mean, we can go and check now, maybe just to do that, just to see what was the total assets and liabilities. There's it.
Right.
Okay, so there's nothing wrong with what we did. If there was a problem with what we did, then we'd have to go back and then see, well, did we make a mistake? Where did we make a mistake? And then we fix, if need be. Okay.